Hi there, Michelle McFarland here, the most preferred realtor. I am here with Sandra Brown. We are going to chat today about pre-approvals, what they are, and why they are so important.
Hi, I'm Sandra Brown, and I'm with Mortgage Alliance, and I'm your mortgage agent that's going to help you determine whether you should be putting conditions of finance or not. Because like Michelle says, pre-approvals is the most confusing thing for buyers today.
Yeah, I do find that a lot of buyers are unclear as to whether they have been pre-approved or whether they haven't been, or, you know, their banker said that they are approved for X amount. Does that count as a pre-approval? And yeah.
So I'm glad you mentioned that, Michelle, because there's actually two concepts here. There's one thing called a pre-qualification, and this is where Michelle goes into her bank and she says, hey, I make $60,000 a year. Can I afford a $300,000 house? And they say, oh, yes, go ahead. You should be good. You should be good is the words. You got to be careful.
Yeah.
That just means they haven't looked at anything. They haven't looked at your income. They haven't looked at your credit. They haven't looked at anything. They're going based on what you tell them you made and that your credit's good. Right. So when you do that, please be aware that it means nothing.
Okay. Yeah.
Okay? It really doesn't give you any guideline. Then there's an actual pre-approval.
Okay.
This is where your lender, myself, will take your income documents, look at your pay stubs, and pull your credit report.
Okay.
And this way we can look at your credit, and then if there's an issue in your credit, we're going to talk to you and we're going to tell you how to fix those issues.
Right.
But again, it's
we talked about in a previous video.
Exactly. So then we're going to take that pre-approval. We're going to get you to this position that you know how much you can afford, and basically whether or not you're going to qualify based on your credit. And sometimes your lenders are going to say to you, we're going to try this on a live deal. And that's usually meant for self-employed people because, again, lenders are looking at different avenues of your file, okay? Right. A pre-approval, again, means that, hey, Michelle, you as a buyer is good to go. You make enough money, and yes, your credit's good enough, you can buy.
Right.
It does not mean you can go in with no conditions of finance.
Right.
Because
it's so important to put in the condition of finance, just in case.
Exactly, exactly. I see it all the time. They come to me, they get pre-approved. I say, go ahead, you can buy a house that's $250,000. They go to their realtor and say, Michelle, I don't need conditions of finance because I'm pre-approved.
That is not true.
That's not quite true because you are pre-approved. The house is not. And there's no way we can pre-approve a house because you're looking at thousands of houses, some people, or 500. There's no way we can pre-approve that house.
Yeah, right.
So a pre-approval strictly means that you as a buyer make enough money to afford that type of house, that amount of money on the house.
Right.
Based on things. The other thing that people do is they'll say to me, hey, Sandy, I want to buy a $300,000 house. Property taxes would be roughly about $2,400, and that should be good. Here's how much I make. So we put that all in, and then they turn around and they buy a house that's way more than what they were approved for, or it's a condo where they now have $500 a month fees for condos.
Yeah, it's really important. I do find that people need to always take into account taxes, like property taxes. If it is a condo fees, stuff like that, because I mean that essentially is going to roll into your monthly bills.
So with our customers, Michelle, what we tell them is, okay, you found some houses you want to look at. Call Sandra, is what Michelle's saying. She's going to run your numbers with the property tax that we know we have and the purchase amount to see if you still qualify for that amount of a mortgage.
Right.
If it ends up that your numbers no longer work, the other option you have is to put a bigger down payment.
Right. Yeah.
Or have somebody else buy the house with you.
What's that?
Have somebody else buy the house with you. Go buy it.
So cosigner?
Well, be careful with the word cosigner. Sometimes it means actually somebody buying the house with you. In this day and age, as you know, Michelle, the housing prices have gotten silly.
Yeah. So
somebody making $50,000 can't afford a house because $200,000 houses, there's not a whole lot of them around anymore. So they need somebody
that don't need to be demolished.
Exactly, right? And we're being realistic here. There is some that are under 200,000, but they need a lot of work, according to realtors like yourself.
Yeah.
So sometimes they just need to have that extra income. So having a second person making 50,000, now you have a combined household income of $100,000 that maybe now you can qualify for that house you want.
Right. Now, when you approve somebody, pre-approve them, do you give them a piece of paper saying that they are pre-approved, or is it more like you had said, with going, doing it with a live deal rather than, and seeing if it works out, rather than having a piece of paper stating like, yeah, you're good for 350? Because I know people ask me that all the time, like, am I going to get a sheet from the bank like that I can give you? So,
Depending on the circumstances.
okay.
If you're somebody who's straight cut and dry, you've got your down payment, your own down payment, you are employed by an employee, you've been working, like, if you're a very straightforward client, yes, I can get you pre-approvals, letters.
Right. Okay.
If you're self-employed, no lender's going to pre-approve you for a self-employed deal.
Okay.
It's going to be subject to the lender's underwriting policies.
Okay.
And then again, so even with the self-employed, if they are somebody who declares all their income on their taxes, then we're fine. We can probably get them pre-approved. But if you're somebody who makes $100,000 a year in your business, but declares $10,000 as your net income, then you have a problem because we have to use a different program for you. And when we have unique programs, that's the other, or people who've had bruised credit.
Right.
Something terrible in their life happened to them that they end up with bruised credit, and it happens. Those are tougher to get pre-approvals for because lenders want to make sure the insurer's on board with the deal first.
Right. Right. And is there anything different between somebody putting 5 or 10 or 15% down as opposed to somebody putting 20% down?
Yes, some lenders. So a couple of things are affected, and depending on the situation. There's a misconception. If I put 20% down, I don't have to pay the insurer fees. True, but your rates are going to be higher.
Okay.
When you put in 5, 10, 15%, it's an insured deal, and you fall under the insurer guidelines. And as long as the insurer says yes to your deal, then you're going to get a better rate.
Okay.
Now, if you have, say, 35% down, you're getting a better rate than somebody who put 20% down, because 20% means unsure or insurable.
Okay.
If they don't meet those certain guidelines, specific guidelines, then they may be a different category of people with 20% down. So again, it varies based on the customer situation.
Okay.
So that's the biggest problem. I'll hear people say, well, my buddy had this done. I say, but you don't understand his whole scenario.
Yeah, everybody's situation is different, and that's what a lot of people don't understand, that they just think a pre-approval is cut and dry and easy to say yay or nay, whereas everybody's personal circumstance is different. Their employment, their credit, everything, you know, combined is their own custom little, you know. So yeah, I guess it makes sense that everyone's situation.
And as we talked about this before, and we say this all the time, the problem is I can get you a pre-approval letter and then you quit your job. That paper's worth nothing.
Yeah, absolutely. Yeah, so those are the big no-nos. Don't go out and buy something after you've been pre-approved. Don't go buy anything. Don't quit your job or start something new.
I think we talked about that from every process through this. Don't quit your job. Don't buy anything. Don't buy a car in particular.
Yeah.
Just a whole bunch of things that before you make any decisions going forward, once you get pre-approved, call your lender.
Yeah.
Not only that, policy changes affect these pre-approvals. For example, last spring, a qualifier rate was 5.04. So many people didn't qualify because of that rate. Well, now the qualifier rate's 4.94. Those same people will now qualify.
Right.
And then reverse happens as well. So sometimes they qualified when they got their pre-approval, but the government has changed some rules, like CMHC just changed their underwriting guidelines. So a lot of people that we had pre-approved, if that's who they were pre-approved with,
right.
You know, that's if we're trying to use that insurer, then we got a problem. So always check to make sure your numbers match. So we're lucky right now because our insurers, not all of them are on board with CMHC, so the policies are different, so we're okay. But again, what I'm saying is they change from one month to another month. The policies could change, which will affect your pre-approval. So always call your underwriter or your lender.
And if you're actively looking, you need to be in contact with both your realtor and your lender at the same time, so that everybody is on board. With the way that the market is right now,
Yeah.
It's crazy. It's multiple offers and, you know, like you said, silly house prices and stuff like that. So, I mean, I'm very firm with my buyers when we start to home shop that they have all of their ducks in a row and everything is solidified and we are all on the same page. We're communicating. We know what is going on, because when you find that house that you absolutely love, you need to be prepared to have a strategy in place as to how much you're going to spend, what your budget is, what you know what you can afford and what you can't afford, and, you know, go from there, because it's super, super important. If you don't have money to buy a house, then you can't buy a house.
Well, your team of professionals is your most valuable tool. Okay, I'm a mortgage agent, so anything to do with mortgages, I'm going to answer those questions. And when you have a good team like Michelle and I, we work together.
Mm-hmm.
So then that way, whenever there's changes to your deal when you're buying a house, Michelle's making sure Sandra's keeping up to date on your paperwork.
Yeah.
Because the last thing you want is not to have that. And then eventually you're going to bring in a lawyer and you want to make sure your lawyer knows who your mortgage person is and your realtor is, so that your lawyer has all the information.
And we take care of all of this stuff for you so that you don't have to communicate to Sandra, to me. You guys don't have to be the middlemen. You can just lay back and enjoy yourself as we do all the work for you.
We can be as involved or uninvolved as you want us to be. That's what I think it is. Because some people just don't want Michelle and me speaking to each other. That's okay.
Yeah, which is, I mean, it's totally okay, but at the same time, it takes off a huge stress load to the buyer when it comes to this, right? So if they can just, and they should trust us enough to know that we're taking care of things. So the fact that they can just sit back and kind of just let it ride and we deal with all of the
And
headaches.
here's the other thing, Michelle, that we need to warn people. A lot of people will say, not necessarily just buyers, but sellers as well. They're going to the next house. Just because you got a mortgage on the house you're living in now does not mean you're guaranteed to get one on the next house.
Yeah.
So you should be still reaching out to your mortgage person, or me in particular, and saying, hey, do I qualify for and how much? So that's the important part. How much do I qualify for?
Yes, that's always important. I've had a situation where the client was selling a home and they thought because they had a home worth X amount, that they could at least buy another house for X amount, but unfortunately it did not end up that way. So it was a situation where, you know, had they been more educated and informed, they may have not moved.
That's right. And that's the guidance of us. The last thing you and I want is to see anybody be homeless because of the fact that they didn't have all the information going into the transaction.
Or have to downgrade. Because that's not the point of selling a home, is downgrading.
That's right. Exactly. So that's
downsizing, but not downgrading.
That's right. We're here to help you. That's the goal. Right, Michelle?
Yep.
So tell me about how, whenever you have a client come to you and says, I'm pre-approved, I don't need finances, how does that make you feel as a realtor?
I mean, it makes it a little bit wonky in the sense that, you know, if we go in and multiple offers with 5 or 6 or 7 other people or more, and we go in without financing, I mean, you're risking that, you know, if you get that deal and you need an appraisal and the house comes back and the appraisal does not match what you're paying for the property, they don't realize that they are going to be responsible for the difference. And then at the same time, even worst case scenario is, you know, the bank does not want to finance that home. So they're legally bound to that deal in the sense of you just bought a house and now you can't buy it. The bank is not going to lend you the money. So now you need to figure out what you're going to do.
And that's a good point, because I've had many situations lately where the insurers are asking for home inspections up front before they'll even approve the deal. So the whole slowdown, because a home inspection could take, what, 2-3 days to get it booked, Michelle?
Yeah, sometimes. It just depends on who you have available to you. But
yeah, so you don't want delays, especially whenever there's that one period that you have of conditions between the time you've made the offer, right, and the time that you actually own that house.
Yeah, yeah.
And on a real estate perspective, with this market, do you have a lot of time to be putting up there saying for other conditions?
And that's, you know, that's the one problem that we run into is there's people coming in with firm offers with no other conditions. usually, which surpasses everybody because as a seller, that's what they want. But yeah, like we don't have a lot of time you need to make sure that you have your ducks in a row before. We can't be asking for, 7 and 10 and 14 business days to get, this stuff sorted. We need to know within 3 to 5 business days if we're going to be competitive, because chances are you're going to be in competition with five or more people. So you need to have the competitive edge, which is why I'm running a crash course for first-time home buyers to be prepared for this market, because you need to know your stuff and you need to be prepared.
Yeah, perfect. All right, Michelle, any other questions on this topic?
I don't think so. I mean, if anybody ever has questions about these videos, please just comment below and we will be happy to answer any of the questions that you might have.
That's right. Perfect.
Awesome. Well, have a great day, guys, and thanks for tuning in. We'll see you next time.
Thank you very much. Have a great day, everyone.